Hey there, wealth builders. Welcome back to another informative episode on our channel. I hope you're ready for some serious talk today, because we're diving headfirst into the scary world of the upcoming 2023 recession. Yes, you heard it right, the big bad R word. But don't run away in fear, because today we're going to show you how to transform this wild ride into an incredible wealth-building opportunity. Warren Buffett once said, "Bad news is an investor's best friend." So let's buckle our seatbelts and make friends with the bad news, shall we? First off, let's change our perspective. In the world of finance, a cloudy sky often means there's a silver lining waiting to be discovered. Over the next 12 to 24 months, everything is going on sale. Yes, you heard that right. That scary 30% drop in stock value you've been losing sleep over. Maybe it's not as bad as it first appears. Let's put on our wealth-building goggles and see it for what it really is. A 30% discount on your future investments. It can be incredibly fun when everything is on sale. But before we dive into the bargain bin, exactly what is a recession? Let's take a quick crash course on what a recession really is. Imagine you're riding an economic roller coaster. You're going up, 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 and then suddenly you're going down. That, my friends, is a recession, a significant, long-lasting economic downturn. It's characterized by reduced gross domestic product, high unemployment, decreased consumer spending, and business profit losses. This slowdown can result from various factors like financial crisis, market volatility, policy changes, or even global downturns. A recession is usually identified by 2 successive quarters of negative GDP growth, a scenario we saw unfolding in the US in 2022. Let's dive deeper into the current job market, because this is such a significant indicator that a recession is coming. Several significant companies are slashing jobs, which can further intensify the recession. This not only affects the employees and their families, but also has a ripple effect on the economy at large. Tyson, for instance, announced layoffs of nearly 1,700 workers in March after closing 2 poultry plants. They're trying to boost profits, but at the cost of many livelihoods. Manufacturing giant 3M is laying off 6,000 staff globally, on top of the 2,500 jobs they eliminated earlier. That's a lot of Post-it notes and Scotch tape makers without jobs. Lyft, the rideshare company, plans to cut its workforce substantially, following a 13% job cut last November. The fear of the impending recession is making them hit the brakes hard. Major consulting firm Deloitte is set to lay off 1,200 employees, while a digital media company is reducing its workforce by 15%. David's Bridal, one of the largest wedding gown sellers in the US, is letting go of thousands of workers. That's thousands of wedding dreams impacted. Walmart, America's largest private employer, is laying off over 2,000 workers at its US warehouses. This comes after it warned of a tough year ahead. McDonald's has instructed corporate employees to work from home, anticipating layoffs. Bed, Bath & Beyond, already on bankruptcy watch, has been closing stores and laying off workers. Tech giant Meta, known as Facebook, is handing out pink slips to another 10,000 employees. Disney is letting go of around 7,000 people in 3 rounds of layoffs. Accenture is slashing 19,000 jobs worldwide. Amazon has cut 9,000 jobs in March alone, taking its total job cuts this year to around 27,000. Job listing site Indeed.com has announced cuts of approximately 2,200 employees. Yahoo intends to cut 20% of its total workforce by the end of this year. These job cuts reflect the bleak economic picture we're currently facing. It's an unfortunate chain reaction. Businesses strive to survive. Jobs get cut. Consumers spend less, which in turn affects businesses. But remember, even in these tough times, there are opportunities to be found. As we discussed earlier, stay resilient, keep learning, and keep adapting. So, what's the deal with this 2023 recession? The word on Wall Street is a 20% drop in the stock market. Yikes. That's like watching your roller coaster take a sharp dive. And the job market. Bank of America is predicting a monthly job loss of 175,000 in the US, and the major indexes. They could take an additional 20% tumble from today's levels. Historically, recession bear markets average a 35% drop. That's a huge drop. But let's not forget about the real estate market. It's like a giant, slow-moving creature that often shows different reactions to economic downturns. The national housing market could see a 6 to 7% dip, and places like Florida, Arizona, Idaho, and Southern California may even see a drop of as much as 25%. But hey, for those of you planning to stay in your homes for 5 to 10 years, don't sweat it. And remember, for the savvy investors out there, this could mean some fantastic deals to scoop up during this recession. Now, let's talk about good old cash. It might lose value due to inflation, but Susie Orman says cash is like oxygen. You don't notice it when you have it, but you can't survive without it when you don't. Did you know cash was the best performing asset in 2018? Yup, and it's now forming a large part of many of the largest portfolios. Even Citigroup deems cash the only recession-safe asset, so don't discount those dollar bills just yet. So, how can you take advantage this recession to build your personal wealth? Remember, everything gets cheaper. Remember that 20 to 30% fall on the roller coaster. This is your 30% discount opportunity. Warren Buffett likes to compare this to fluctuating hamburger prices. Imagine going to your favorite burger joint and finding out your favorite hamburger is suddenly 30% off. Now that's a tasty deal, wouldn't you agree? One of the best things about a recession: less competition. This is the perfect time for smaller, more aggressive companies to grow. In fact, studies show that companies advertising during a recession tend to increase their value. This is when the tough gets going, and the going gets more profitable. A recession also acts like a forest fire, clearing out the deadwood and providing growth opportunities for stronger, newer trees. Or, in our case, businesses. As the old, unsustainable companies fall by the wayside, you'll find plenty of room for new, innovative companies to take root and grow. It's nature's way of creating balance, and it applies to economics as well. And remember, after every bear market comes a bull market. It's like the calm after the storm, where the sun shines brighter and the grass looks greener. The S&P 500 typically falls 29% during a recession, then returns 40% the following year and goes up around 58% within 2 years. So, investing during a downturn can actually be much more profitable than waiting for the storm to pass. Now, the million-dollar question: how can you profit from a recession? Let's start with the basics. First, you can cut back on unnecessary spending and prepare for a potential income drop of 20 to 50%. It's like tightening your seatbelt before the roller coaster takes a dip. Maintaining some cash also offers peace of mind and a safety net for emergencies. In this roller coaster ride, it's your safety harness. Your job or primary income source should be protected, as job loss during a market downturn is the worst-case scenario. It's like losing your grip on the safety bar mid-ride. Not a situation you want to find yourself in. When it comes to investing, think long-term. Continue your usual investment practices and practice dollar-cost averaging, which means buying into the markets regularly. This strategy can help you take advantage of those juicy discounts we talked about earlier. And remember, never put all your eggs in one basket. Diversify your investments. If a 20 to 30% drop is unbearable, you may be investing too aggressively. Including international stocks, large caps, and real estate can add significant stability to your portfolio. This recession can provide you with huge opportunities to buy at lower prices, start new businesses, and even improve your skills. It's like a one-stop shop for all things financial. So buckle up, stay committed, and remember, every downturn is followed by an upturn. Make the most of this tough time, and you'll reap significant rewards when the market recovers. Until next time, keep building your wealth. Please take a second to smash that subscribe button to help us bring you more wealth building advice. Thanks again, and we'll see you in the next one.